All right, what's going on, everybody? How you guys doing? Welcome to another daily chart breakdown where I show you the ins and outs of what I'm personally doing on a day-to-day basis in the markets. Our goal of our channel and of our company is to help people to get to the point where you don't need signals, you don't need help. You can be able to build your account by yourself. If you are that type of person, go ahead and click on the like button. It literally tells me, hey, I want to see more of these videos. I like the videos that you're putting out, and we're going from there, all right, guys? So what we're looking at right now is EURUSD. It has had the pullback that we need for the continuation to the downside. So there's two ways that this could be able to go. I'm going to show you both. All right, so our first analysis is for price to continue to the downside, right? So from point A to point B, and looking for, well, no, actually, that's not the trade. It's actually based upon a way higher time frame from point A to point B to point C for the continuation to this 1.07 area. All right, this is what I'm looking for, the continuation to the downside. That's the first idea. We already caught 100 pips based upon that, right? And with that being the case, yeah, I'm going to show you why only 100 pips, which is unfortunate. The reason why is because our rule that we follow states, let's say that you get into a trade, so we enter in right here, from point A to point B. If price retraces past 38.2 and closes past 38.2, I close out my trade completely. I really don't like that rule because sometimes it's good, sometimes it's bad. And in this case, it's bad. Why is it bad? Because the thing is, I had my entry here, prices pushes all the way down here, so it went 160 pips, but I only caught 90 of them. All right. But why would I do that? Why would I hold this trade, all the way about over here? I could make significantly more money if I just got out here. Well, the reason why is because I'm not even gonna front, I'm gonna change this rule. The reason why is because the percentage of times that price goes from point A to point B to point C, 38.2 for the continuation, is way smaller than if price actually does a full pullback. Most times price does a full pullback passing 38.2, then getting to 38.2, and then continuation. So I'm still deliberating exactly where I want to go ahead and do that as far as setting my rule, because right now it's 38.2. There's times that price gets to 38.2 and then continues, and then I can keep that trade along with getting into another trade. All right, so I'm thinking to make it where if it breaks structure, I get out. Break structure in a lower time frame, I get out. I wouldn't be surprised. That's probably what I'm going to do. But there's times where it does break structure in a lower time frame, only goes to like 23.6, or it breaks structure, but it doesn't really break structure, and then it continues, and then I'm out of the trade. Now I'm pissed off. So there's that balance that it's a good problem to have. Oh man, I only caught 90 pips. So I'm still in that dilemma, whether I'm going to figure out what to do. But either way, the trade is still to the downside, and that's still what I'm looking for price to get to. Now, right here, we see that price literally only got to 50% flat. All right, so point A, point B, point C, 50%. Now, what we're looking for, let's go to the daily, to the 1 hour time frame, and what we're looking for are bearish engulfing candles. This technically right here, bullish bearish. This technically is that bearish engulfing candle that we're supposed to look for. But being the fact that these candles are so large, I don't like that. I'd rather for price to go ahead and pull back up, and then break its structure. Once it breaks that structure, then I'll feel confident as far as looking for another bearish engulfing pattern after it has a pullback. This is what I mean. It had a push. I'm looking for price to push up a bit, break its structure, right? It broke the structure here, right? And that's great. Let me show you. It broke the structure right here. Good. Let's make this red. It broke the structure there. Good. But you don't get in right away. wait for another pullback, then the bearish engulfing candle for the continuation. All right, so that's what you're supposed to look for. Price got to 50%, great. There's a possibility it can go to 61.8, and that's why you don't want to enter in right now. All right, so that's theory number one. Theory number two says there's a possibility this can actually continue to the upside. Why can't it? Well, based upon the daily time frame, this only got to 50%. Price generally goes to 61.8. Price can also go to 78.6 in confluence with that monthly. So there's a possibility that price can actually go ahead and do this. Point A. Come on. The heck? Point A. Jeez, bro. Point A. Point A, point B, point C, 61.8 in confluence with our daily key level for the continuation to the push to this negative 27%. I don't want to say I always look at both, but I generally look at both. Why? Because the thing is, I don't like being faked out. You know, so this is why we have so many confirmations on the lower time frame. Hey, it's gonna do X, Y, or Z. This is what I'm talking about over here, where price went from point A. Let's do the larger one. Point A, point B, point C, point D, right? Had price find a level support 2 times, price pushed. You would think that it would be a continuation to the downside, but no, price went point A, point B, point C, point D. There's a possibility that price can do the same thing. Point A, point B, point C, point D. Right? Price can push. So that's why I'm kind of hesitant getting into another one so quickly. I'd rather wait for the lower time frame to tell me, hey, I'm looking to be able to continue to the downside, which is exactly what I was talking about over here with, you know, breaking structure and then showing the continuation. So I'm gonna hold off on EURUSD. As far as AUDUSD, it looks a little bit better for me, but I wouldn't be surprised. I'm 80% bearish EURUSD. All right, so that being the case, guys, hopefully that you know helped a bit. If there's any questions in there, because I wouldn't be surprised there are, it's okay to ask your questions. You're not gonna look weird, or no one's gonna look at your comment and be like, "Ha, this person doesn't understand." No one does that. Right? Ask your freaking question. Don't be embarrassed. Just ask it. And as far as my response, that's the response. Okay. So, greatly appreciate your time, guys. Continue hopping up on these videos. If they're helping you out, click on the like button. It's just like a trade-off. You know what I mean? I show you some good content. Just click on the like button. All right? Greatly appreciate your time, guys. Peace.